Hey everybody, Boris with BK Forex. Welcome to the crosses section from March 6th to March 10th, 2017. And the crosses story I think is very interesting. As last week we noticed, the euro against the COM dollars was starting to be an interesting trade, and this week it really blossomed into a very good trade. And to me, that's still one of the better trades that we have out there. The euro, in this case, the euro kiwi, in my opinion, the strongest breakout of all the euro against the COM dollars. Has a resistance 152, supported 148. We broke the 150 to the upside. Very, very strong candle. I'll show it to you on the charts right now. And that tells me that any kind of a pullback here, very worthy of possibly a buy. I like this to the long side. It's probably the strongest long bias we have this week. Euro pound is a secondary long bias. Now, it is running into some pretty serious resistance here against this 86.50 level, but still, it's really more a trade on, I suppose, potential cable weakness than anything else. I think euro stays relatively stationary and rock solid, and the resistance here at this 86.50, if that can get taken out, it really puts us on the path towards the 88 level. As we noticed last week, 84 was very key support and proved to be a pretty decent continuation trade last week. The third idea is really a vol trade, and what I mean by this is that it's a contrarian idea in the sense that everybody at this point is kind of convinced that yen is going to 115. The dollar really breaks out, and that there's possibility here, for more upside on the yen crosses. Yet, if you look at pound yen, the pound yen is one of those crosses that really did not participate in any of the yen rally at all this week. And in fact, it's just dead even at the 140 level. Volatility is compressed to virtually nothing. And generally, when you see that kind of a structure, it's going to break one way or the other. So to me, the range 142, 138 is the key range, but a break of 141 or higher puts us possibly towards a move towards the 142, just on a momentum basis. And a break below the 140 into the 139s really puts us on path, perhaps to a much sharper break to the downside. My point is that if for some reason yen starts to break down, dollar yen starts to break down, cable is not going to be the strong trade here. So the pound yen is probably going to be one of the weakest of the yen crosses, and that makes it an interesting short as a contrarian idea. Let's take a look at the charts here and just see what I mean. Let's just start first of all with my favorite long biases. So we talked about the idea the euro to the COM dollars and the crosses was a very strong trade last week. It definitely worked very well. Big breakout on Friday. Generally, when you have these kind of massive candles in the crosses, especially in the euro kiwi, there is certainly some potential for continuation. Most of the time, you will have some slippage, but the continuation very much plays. Even in very sharp corrective moves where you have 2-3 up moves, a corrective move, it still holds above the prior low and continues higher. So depending on your risk tolerance, depending on your view of how you want to trade this, on the near term, I really like buying this in any kind of a dip into the 150s for a potential move towards the 152. That's the big resist here at the 152 here. On a longer term basis, even if this comes in sharper, as long as the 146 level holds, it still points to a higher move. Ultimately, though, it could really be very much a runaway trade. So in some ways, probably the most pragmatic way of trading this is a small dip in the toe here. If it starts to run away, you just kind of let it go to the 152s. If it starts to come in, you add to the position on the assumption that you have a stronger bias to the upside. It's going to be hard to trade this, I think, perfectly, but that's probably the most pragmatic way of doing it as you go forward. On the euro pound, not nearly as much drama because the volatility here is more compressed, and most of the move, as we talked about it last week, has already happened into this very key resist point. So now this is really in many ways. So this is another interesting thing of sort of if you trade the pound bounce. We talked about the idea, well, maybe you could take a contrarian trade in the pound that's very close to its a near-term swing low at 122, therefore a little downside. And this is the same kind of idea. So you could say, well, there's little downside here because we're very close to resist. If I basically short here with, let's say, an 86.75, maybe even 87 stop, just to give myself a little more room, if it doesn't clear that stop, it's very likely it's going to turn back down, which is quite possible. The breakout trade, of course, is the buy of the 86.50 on the assumption that we go towards 88. It looks certainly more like a breakout trade, but a contrarian trade with low risk here could be an interesting, just sort of a contrarian trade if you're super, if you want to express some kind of a long pound trade in a small amount of risk fashion. The last thing, as I said this week, that looks interesting, simply just from a two-way price action. This is not a situation where I have a strong bias one way or the other, but this is a situation where the market, I think, could give us a very strong signal. Because as I said, when you have, look, just a massive compression of volatility, I really have rarely seen such huge compression of volatility. The highs coming in, the lows coming in. When you have that type of compression, the breakout here tends to be very, very telling. So we need to watch for the breakout here. The breakout here, even on a small basis, like down to 139, could be a signal that we're going to go right down to this 136. I would look for the trade of the 141, 139 as my initial signal for the direction, and take that just to see where it goes this week, because that could be a very, very interesting trade as the week progresses. Wish you guys the best of luck, the best of trading. Boris, over and out.